Deep breath.
All righty, 2 mics. Good morning, everyone. You know, I was just up here a few minutes ago with Robinhood, so now we can go from retail to institutions a little bit with the mics. And it's always great when we can lead with some news. I don't know how much everyone here or watching online has caught up on crypto news this morning, but Galaxy announcing a partnership just today in the Journal with Invesco to launch, wow, applause, look at that. Is that the Galaxy team right there?
I've got to be the Galaxy team.
Right, now I know why, yeah. But to work on various ETFs in crypto. Now, of course, some of this is very dependent on a US Bitcoin ETF actually being approved, which for now has been a big if. But Mike Novogratz, let's just jump into that partnership, what that looks like, and talk to me about maybe thinking that bringing on an Invesco might actually help. I mean, is this about getting a legitimate partner from that side?
Invesco kind of invented the ETF, right? They came out with the QQQ. They have 1,000 salespeople that sell their products. And so since I started my kind of crypto journey, I thought the idea was, how can we bring more people into the tent? And so me and many people out there proselytizing all the time in small communities and on TV. How do you bring people into the tent? How can you convince them to understand what Bitcoin is, what Web3 is, and all the rest? And so I thought, no better way than instantly having 1,000 unbelievably trained salesmen and lawyers who understand ETFs. And so we're looking at this as a multi-year partnership to come up with lots of products. We're thrilled that Invesco chose us to be their partners, and couldn't be more excited. And do think, I'm not sure when Mr. Gensler decides to pull the trigger, but there are going to be equity ETFs with all the different public stocks. There are going to be all kinds of different products that come out. And the SEC will get there.
You sure?
I'm sure. I don't know when, but I'm sure they will get there.
Let's talk a little bit about the ETF element, and Mike Belshe, I'd love your take too from the institutional side, but you hear a lot of demand for the ETF, but what some crypto purists would say is, well, all these people want exposure to crypto from some lateral way. Like some people think, well, maybe now I could buy Coinbase stock, that's exposure to crypto, an ETF. And what purists would say is, just buy crypto. Why not just buy Bitcoin?
Sure, well, look, one of the great things about the ethos of Bitcoin is its openness, its freedom. You get to choose how you're going to invest on your own. And different people have different levels of comfort all across the spectrum. So obviously, there's a lot of folks out there that are interested in Bitcoin, but may not be quite ready to hold it themselves. So they should have a way to participate. But more importantly, consider a fiduciary, right? It's great as an individual to hold your own asset. Fiduciaries, we always hold a higher bar, right? Fiduciaries are holding other people's asset. So we monitor that, we scrutinize that, we regulate that. How do they have access for their clients to these assets? So the ETF is going to turn out to be an easy way for people to jump in and get started. We forget, we're 10 years in. We like to think that this is a mature asset class. It's getting better every day, of course, but there's still a lot of work to be done. So the ETF turns out to be a great way where you can actually have direct exposure to it. And yet, yes, you do have to have trust on another party that's actually going to manage that on your behalf. But look, all Bitcoiners should be very excited about ETFs being launched. It's making it accessible to the world. Ubiquity is what's going to allow us to get to the next level. It's going to drop down the volatility, increase the ability to have use cases that work for the future.
Let me say one other thing. We have this term, the democratization of finance, gets kicked around all the time. And some people take that to mean that everybody should be their own FA, that everyone should be a markets junkie. And I actually don't think that's the case at all. I think doctors should doctor. And listen, I do think the blockchain will change how medicine gets delivered, and just as it's changing how art can get delivered. But I don't want a world where everyone is sitting checking their screen every 15 minutes, looking at charts, looking at Gann fans and Fibonacci levels.
You don't think we're already in that world?
Some of you guys are in that world, but the reality is most people should and want to turn to an expert to help them manage their finances. And so the FAs at Morgan Stanley or Goldman Sachs or you name the bank serve a really vital purpose in helping people manage their future. And I don't think the world is going to change. How they do that, the products they can participate in are all going to change. And so we're in this evolution of giving them new products, and that's where ETFs and other things fit in. But I do think, I don't see a world where, you know, the 62-year-old grandmother who had spent her whole life as a nurse all of a sudden decides she's going to be a great trader. You know, becoming a great investor takes repetitions, it takes hard work, it takes knowledge. You just don't say, hey, I'm a trader. Just like me saying, I'm a doctor, can I operate on you?
Wait, the folks on Wall Street Bets would disagree with you.
I think some of the folks on Wall Street Bets work their ass off. They understand exactly what's happening in the market. A lot of them don't. And I think in the long run, a lot of them who don't are going to lose money. Right now it feels easy because we've had this giant bull market in assets because interest rates are at zero and everything's going up. But investing is not easy, right? I tell this to my hedge fund friends all the time. There has never, ever in the history of hedge funds been a hedge fund that has lasted more than 5 years that ran at over 30 vol, ever. And so, you know, if you look at the way people are running their PAs with, you know, Bitcoin as a 100 vol asset, and heck, the altcoin's much higher than 100 vol, Ethereum higher than 100 vol, and people are going in fully invested or even leveraged, the math just says you're going to get carted out. Unless you think I'm better than Stan Druckenmiller. I know I haven't been trained, but damn it, I'm better than Stan Druckenmiller.
Stan likes crypto.
And so I just throw that kind of wet blanket out there a little bit that, you know, I do appreciate finance being open to the world. I do think developing domain expertise is really important.
Yeah. Mike B., you know, at BitGo, you guys have built a very sizable business doing institutional custody, and I guess I'd ask, who are the institutions? You know, it's almost become a buzzword when we talk about institutional crypto adoption. At the very least, we just know it's not individuals, but who are the clients that are coming to BitGo right now? And I'd also ask what you're hearing the most from them in terms of people who maybe they resisted crypto and now they're ready to get in.
Yeah, well, you know, over the last 8 years that we've been doing this, a lot of what we're doing is just building confidence and building trust that this asset class is ready for them, that it meets the metaphor they're looking for. You know, who's the management team and the security, and you know, what are the backup systems that you have behind it. So overall, it's hitting all sectors. Frankly, it's I don't really like the herd concept or the wall.
I was going to ask about that. Yeah.
I think it's much more of a line that grows, but it's across all sectors, and we can't share all our clients. Some of our clients are pretty well known. We've hit, of course, the crypto companies pretty hard over the early part of that. But the exciting part is, like, in recent years, we're starting to see endowments, pension funds. And the reason that's so intriguing is because these are the most conservative guys out there. Their job is wealth preservation, right? And for them in the last year and a half to start taking a look at Bitcoin digital assets tells us something stunning. So we had a big peak, you know, back 2017 that came down. A lot of institutions were looking back then. And when they looked under the covers and they looked at the market structure around digital assets, it wasn't quite ready for them. Now, fast forward 3.5, 4 years, throw a pandemic in there, all of a sudden they take a look. All the things that we've been building in terms of the regulatory angle, in terms of, you know, who's using it, and the security components, they're able now to take a look at that same asset class and say they want to participate. Secondarily, put the backstop of the pandemic, and they're in. So anyway, it's across all sectors. I think there's been a lot of talk about corporates. I think that's actually going to be a little harder to come in. Of course, you've got, you know, MicroStrategy placing a particular big bet.
Again and again and again.
You got Tesla, you know, which has a particular, I think, ability to kind of draw from the retail sector with a populist type movement. But holding digital assets on your balance sheet for corporations remains pretty tough for a CFO. They're not used to holding commodities on the balance sheet. That's not usually what they do with their treasury. We're going to see it start to grow, but it's going to take a little bit more. Taxes are a big pain in the neck, but we do have a product for that if you are looking for it. We have to pay a lot of attention to our tax component because we take a lot of transactions. It's difficult to manage, but it's getting there. But I think corporates, everyone's excited about it. It will come, probably a couple more.
Now wait, is it also tough for a CFO to hold crypto on the balance sheet because of either pushback from shareholders, pushback from board members saying, too risky?
Of course. All those things happen. Like, you know, as a CEO or as a board, you're there to operate a business, right? Not to invest in a commodity, much less a high vol commodity. So that is a big challenge for you.
So the thing I've noticed recently, though, and I think I've noticed it in a really striking way, up until about 3-4 months ago, most people, when they talked about crypto, especially if they weren't, deep crypto nerds, they talked about Bitcoin as a store of value or as a hedge versus the debasement of fiat currency. We all heard the story. And the other stuff, blockchain, they didn't really kind of get it. Another version of Bitcoin. And 3 to 4 months ago, really with the boom of NFTs and the first real use case for Web3 that went viral, people woke up and said, oh God, this is the internet of value transfer. And investors now realize, I can't miss Web3. I can't miss the next internet. And so almost every investor I speak to is calling me and trying to get me to explain the difference between Ethereum, Solana, Luna, and all the other level 1 protocols, and starting to understand how is this going to work out. So that's interesting from the investor perspective. Of course, that starts with the family offices and the hedge funds before it gets to the real money guys and the endowments. But almost more interestingly, I've gotten 5 calls in the last 8 days from CEOs of major brands who are saying, how do I participate in Web3? Not as an investor to put it on my balance sheet, but how do I participate? How do I take my community that I've built, if I'm a retail brand, if I'm an exercise club, if I'm you name it, and use this new technology? And so I think there has been an awakening that this is real, that Web3 is here to stay, and that I tell a lot of these companies, one reason, just to start, go buy something, right? I thought it was brilliant that Visa's first move in NFTs wasn't to issue one.
Yeah.
It was to buy one, to say we're part of your community, and now we're gonna be, building and building on that. And so, like, my advice to them is, A, buy something, but start participating. But even accepting Bitcoin or accepting all crypto as a payment, not thinking people are going to use it, sends a really strong message to Gen Z, millennials, to the generation that cares so deeply about this movement, that they're listening to them, that they care. And so for corporates just to even put a tiny amount on their balance sheet. Listen, one of the big state endowment funds told me they were accelerating, one of the biggest pension funds in the country, they were trying to accelerate their adoption, their approval of putting Bitcoin on, because they wanted to send the message to all you guys who are deciding, should I move from New York to Miami or Puerto Rico or Austin or wherever, that they're crypto friendly.
Which one?
I'm not going to tell you. But so I think there's something important there. Like, there's a messaging. People realize that this is a movement, right? People don't protest if the government does something that, makes Apple's stock a little less valuable. There's not a monster online protest. Shareholders are like, oh, that sucks. But when, the government tried to, or they did actually pass the infrastructure bill, you had a roar in DC that they heard.
Yep.
And so people invest in crypto with a different sense of ownership than they do, a different sense of belonging to the community and their identity than they do in equities.
You said, Mike, corporates now realize I need to care about Web3. Great soundbite that we can write up at Decrypt. But let me just push you a little further. Like, the name of our panel here, the herd has arrived. Has it fully arrived? And people talk about NFTs as the doorway, but a lot of people are very skeptical when they look at the NFT space. Of everything in crypto, that's the thing that I still hear the most.
And a lot of people
say,
were really
stupid,
skeptical. When I bought Bitcoin at 100, and like a knucklehead was on the cover of the FT saying Bitcoin was going to go to 1,000, I got ridiculed. A lot of people were very skeptical about Bitcoin becoming a store of value. And all of a sudden, I remember waking up one day, I was like, okay, Ray Dalio, Stan Druckenmiller, Paul Jones, 3 of the greatest macro investors of all time, have now said it's a store of value. So who else do I need before I determine it's a store of value?
A couple more, maybe.
But we got a lot, we've got a lot. And so the herd is probably an unfair word, right? We're always pushing boundaries. Technology doesn't happen overnight. What we've seen, though, is enough success stories in NFTs that people woke up to the fact that, hey, I can monetize and own my own IP. And that's not going away. And so yes, some of the social token experiments will come and go. Some of the prices of NFTs will collapse. Most of them will collapse, right? In the long run, value accrues where people have an emotional tie and you can get a community that's intense enough about it that it can maintain that intensity. What surprised me is how fast these communities can grow and how long they keep their intensity. I mean, I literally think of GameStop, which isn't a crypto.
Might as well be.
It might as well be. It is a crypto. Every single equity investor I know a year ago said, I'm not going to short it, or I'm going to short it, but there's no way it lasts. A year later, we're still trading at 190. It's an identity for people. It is a crypto. And so the passion of these communities can surprise you. So don't sell your crypto punks too early.
Mike B, the reason you guys are kind of paired here today, for anyone who somehow forgot, is this Galaxy BitGo acquisition. I know that deal hasn't maybe formally closed, but a $1.2 billion deal, I think it was framed as the first $1 billion+ acquisition in crypto. Talk to me about what that means for BitGo, joining Galaxy, and are we going to see more of these mega tie-ups soon?
Well, one of the great things about what's going on with crypto, Bitcoin, digital assets, is that software is invading the financial services world. And when software gets into a market, it has a way of just upending everything. It has a way of creating innovation at a level we haven't seen before. I think part of why I would bet most people here are excited at the level of change that we see in this industry. It is changing every day so fast, and our investors have said for years that of all the portfolio companies, our company changes the fastest in the sector that's changing the fastest. All right, well, how do we accelerate this? How do we continue to go to the next level? And the herd has arrived. The herd is coming. It's still early days, so I guess we've got the first part of the herd, but we're building communities around this, and it does have a magical effect. How do we get to the next level? Well, the Galaxy team, fantastic, tremendous financial services expertise, fantastic operating business on their own. BitGo as well, kind of bringing the tech side. And then our goal is to actually continue down this innovative path. So with BitGo Galaxy together, I think we've got a really strong offering in terms of that institutional innovation, meeting the metaphor of what our clients need, but at the same time also pushing forward in an aggressive way.
Let's bring it back to what we started with. We talked about the Invesco QQQ partnership and ETFs. Let's talk about the SEC and regulation. Got to ask you about that. I mean, it's been kind of the topic hanging over not just this conference, but in the last few weeks. Gary Gensler is starting to come out there and say a little bit more. Every time he does media, he talks a little bit more about what he thinks about crypto. And most of what he's saying has not been very promising from the perspective of crypto traders and crypto investors. A lot of people assumed, I think, that Gensler would be very, very pro-crypto just because he once taught a course on blockchain at MIT. What is going to happen with the SEC and regulation, and how do people view it, and what should they do to adhere to regulations?
Listen, it's a great question. Gary is smart. There's absolutely no doubt about it. He's smart. There's absolutely also no doubt about it that he wants to regulate crypto. Clear as can be. He wants to be the sheriff of Cryptoville. He's got an issue that crypto's a new industry, and it doesn't necessarily fall directly in the purview of the SEC or the CFTC. When you can't decide what's a security, if it's not a security, does the SEC even regulate it? And so what he'd like, and he will try really hard for, is to get this Democratic Congress and Democratic Senate to pass legislation that gives him the right to regulate crypto. Right now, nothing seems to be getting passed in Congress. And so there's a to and fro that's going to happen with him trying to, take ground and say, I have the right to regulate here, and a Congress that we'll see. And so I think it's going to be a really, volatile 6 to 12 months in the regulatory sphere. Our community did a terrible job of educating Washington on what our industry was and what's important. I think it's bold that Brian Armstrong is going to actually put out his version of what regulation should look like. I'm dying to maybe call him up and get a preview. but in general, we didn't spend enough time. We're committed now to spending more time in DC. I'm trying to hire a super guy to help us there, to educate senators, congressmen, and to work with the people at the different regulatory agencies. It's not like they're starting at zero. A lot of the young people at the agencies are big owners of crypto. But this is going to be a really challenging year, and we'll see.
You see the onus as partially being on the crypto community
100%.
to educate government officials about how crypto works.
What was so telling, listen, I don't like Ted Cruz. Like you can publish that, even though we both went to Princeton. But I love that speech he gave at the end of that congressional thing where he was like, how dare you guys pass regulation that could cost people their jobs and livelihood when less than 3 of the 100 of us even know what a Bitcoin is. Like that was coming from Ted Cruz's mouth, not me. I was talking to senators that weekend, and a shockingly low knowledge of what our industry was. And some had staffers that knew. And so even the smart senators, and listen, this is a hard industry, like it's not easy concepts. Like to try to understand what magical internet money is, really people are like, wait a minute, hold on, stop. Right. And then you say, no, we're a $2 trillion industry now. What got one of the senators to listen, I was like, dude, our combined company will be close to 500 people with an average salary of over $200,000. Those are all jobs that didn't exist a few years ago. And that got him started. Listen, this is an unbelievably fast-growing industry. The internet, when it was growing at its fastest, had an adoption rate of about 60%, and crypto is over 100%. So we're literally growing 1.5 to 2 times faster than the internet in terms of the adoption of people getting into our space. And so you'd be an idiot as a politician, an idiot, to say, oh, I don't want that around, right? And so...
Say it, they do.
What?
Say it, they do.
Yeah, but because they're not educated. As soon as they understand, wait a minute, there's how many people work there? And so we have a much bigger onus on ourselves to make sure our legislators and senators know what the hell's going on.
I do agree.
Yeah, from your perspective.
Education is important, and it's coming, and it happens slower. I think the regulators are getting in a bit late, so they haven't been listening too carefully in the first half of kind of crypto getting started. But look, BitGo's regulated in 2 different states today, coming to the federal level as well. We talk to the regulators a ton, and they're all very open to figuring this out. The other thing that's going on is we're in a global landscape. So, there's pressure competitively now among countries as to who's going to create the best regulation for these different assets. So I'm actually pretty optimistic. The rules that we have in place, a lot of them were built a long time ago. They were built for a system that doesn't have a blockchain behind it, doesn't have that public information.
Citrus Grove?
What's that?
Citrus Grove?
Sure. But, as we look forward as to how we're going to do this next, we have a whole bunch of new tools that we haven't had in the past. And I think the problems are getting figured out. So again, innovation, I think, is going to be the answer here. And I think we're going to find within a couple of years that actually we've solved problems in ways that provide more transparency to investors, provide lower risk as a result of that, still are able to do identity without just creating honeypots of information that the government collects in various places. But obviously, yeah, as Mike said, there's a ton of education here. There's too many political things where people want sound bites and other motives. But technology will win.
Are you guys hearing clients who are concerned about this, though? They say, I don't want to get in because the regulation looks unfriendly.
When the market goes down, people all blame it on regulation, right? No, but listen, it's a risk. It certainly is a risk to our markets that we get really bad regulation. It doesn't kill the enterprise, but it certainly could slow down the adoption of crypto. And so it's wildly important that we take this stone cold seriously. There was an event last week where I think it was OpenSea. There was one of the senior employees at OpenSea got caught front running all the customers. And what was brilliant about that was it was on the blockchain. It got caught, right? It wasn't caught by the SEC.
Yeah, surprise.
What?
Surprise.
Transparency works.
Transparency works. And so when I sit with politicians and regulators, the single sentence that gets them, I was like, listen, if all the banks had their balance sheets on chain, we wouldn't have the mortgage crisis in 2007, 2008, right? And quite frankly, crypto companies, some are all on chain and some are off chain, and where Gensler's fears are, and I think regulators' fears are are often not necessarily in the wrong places, right? There are big companies that take in deposits from consumers that leverage their balance sheet 50, 60, 100 times. That's risky with an asset liability mismatch. And so if I was the head of the SEC, I'd be worried about those companies. I'd be worried about the consumer. My job is to worry about the consumer. And so it's not that he's a maniac, right? Our industry is not one uniform industry. We have some companies that are conservative, some that are wildly risky. It's interesting, the more that's on chain, the more that you can see it. And so they should be pushing everything on chain, and that's hard for them to get their minds around, so still.
With the few minutes we have left, we've been keeping it pretty broad and talking about institutions and what you guys do in investors and now regulation. Let's talk a little bit about DeFi. A lot of the crowd here would really like to get down the rabbit hole, and they're in multiple DAOs and they live on Discord. What is going to happen in this multi-chain future, Mike? I mean, what's going to happen with these different protocols, and especially in terms of friction reduction? You hear a lot about all the money that can be made now staking and lending, but I mean, man, the SEC doesn't like some of that, by the way. But so, how do you get more people into this stuff?
So let me give one quick answer. I'm going to let Mike, who is far more technical than me. Two things fascinate me. One is, like, speed wins in NFL, right? Like in football, speed wins. It always wins. And like speed kind of wins in the blockchain right now. And so people want things that operate faster and cheaper. The ethos of this thing is that it should be decentralized. And so there's this tension between what's really decentralized and what I used to call them binos, blockchains in name only, what act like a decentralized database, but really aren't decentralized enough. Well, consumers don't seem to care. It's the back of the TV. They don't really understand the back yet. And maybe they will in time. The big question is, as regulators get educated, as they really start focusing in on this, are regulators going to say, I'm not going to allow the financial infrastructure and consumer infrastructure of my country or of the world to be built on something that's not decentralized? And so I think it's a wonky question. Our research guys are doing a report right now on looking at all the different metrics, and we're going to hopefully put it out soon. But I think it's something that the market will decide, and you guys will decide over the next 18 months.
Mike, last thoughts? BitGo eyeing DeFi?
Look, DeFi is where we really start to replace the financial system. So we need those smart contracts working. As Mike said, I think they have to be on decentralized networks. I think the world hasn't quite figured out the difference between those two. It's a subtle difference, but as regulation and other things tie in, the value on being decentralized is going to grow. Anyway, DeFi is very, very promising. It's the most exciting thing going on.
These two guys were great. Please give a big round of applause for the Mikes.
Thanks.
Fun, right?